Let's talk markets, inflation, the Fed. Cameron Dawson's here, Chief Investment Officer of New Edge Wealth. Good morning to you. We're all trying to make sense of what we're seeing out of Europe this morning, what the impact of these European banks are going to mean, and as we were just discussing, what that therefore means to the Federal Reserve and our own markets. And you're seeing a key off of it. But what's your take?
Yeah, clearly there is now a shift back to this risk-off tone with rising risk of the banking sector, not just in the U.S., but now also in Europe. But we're really not certain that that would change the Fed's course, mostly for next week's meeting, just because of that hot CPI print and really that super core services CPI that really accelerated yesterday. And so I think that that keeps the Fed engaged in the inflation fight. And it doesn't necessarily mean that the Fed's going to pause in May as well, because if we think of when the May meeting comes, it's at the very beginning of the month, which means that they'll only have March data to make their decision. So unless we have another banking issue within the US, it could mean that we still have further rate hikes ahead.
When you look, though, at what Jay Powell has to do and how he has to consider or not, this was the discussion, how much does he have to consider what's happening now in the European markets?
Yeah, well, the problem is we've seen Powell, or we've seen the Fed pivot for a lot less. We've seen the Fed pivot in 2018 because of short-term funding markets, 2016, oil and gas banks, go back to 1998 with LTCM. Arguably, the size of SVB, as well as what's possibly happening or brewing within Europe, would have normally argued for the Fed backing off. But the difference today is that inflation is still very hot. So to Melissa's point, as you're balancing this trade-off between financial stability and price stability, the challenge you have is that they haven't had to focus on price stability in the past times that they've pivoted. And so that likely means that the Fed is caught in this corner of having to choose between the two, which just means that there's still very great uncertainty about the policy path ahead.